Before you place your next trade, watch this. The US dollar is under siege as concerns over Federal Reserve independence surface. Gold is stuck at $3,300 an ounce, even as the greenback weakens, and the S&P 500 just reeled in another record high. Stay tuned to find out what this means for your trades. Welcome back. I'm Francois Duplessis, your market analyst here at ATFX Africa. Today, we are taking a look as to why the dollar is crumbling, whether gold's rally has lost its spark, and if stocks can keep climbing. I will guide you through actionable setups and what to watch out for ahead of this week's key inflation data and Fed dynamics. First up, the US dollar's meltdown. Recently, the dollar dropped to its lowest level in over 3 years. It suffered a nearly 10% decline this year alone, its steepest fall since 2003. What's behind the slide? President Trump's sharp criticism on Fed Chair Jerome Powell, even floating possible replacements who are seen as more rate cut friendly. That threat to the Fed's independence has rattled investors, shifting sentiment heavily bearish on the dollar. This isn't just political noise, it's creating real trading opportunities. Let's apply this in real time. First, looking at USDCHF on your screen. You'll notice it's trading close to the support level around 0.799 after failing to hold above recent levels at 0.804. With the dollar under pressure, a break below the support at 0.799 could see this currency pair slide further towards 0.79. Alternatively, a break above the resistance at 0.804 could potentially trigger a retracement towards 0.81. Next up, gold is sitting on a knife edge. XAUUSD remains range bound around the $3,300 an ounce mark. Interestingly, gold hasn't rallied despite the weaker dollar and lower treasury yields. Why? A combination of solid US economic data like the better than expected durable goods orders and lower unemployment claims offset any safe haven demands. Taking a look at the XAUUSD chart, prices currently at that crucial $3,300 an ounce psychological level. Notice how the 50-day EMA lines up closely here, offering a natural resistance. A break above 3,345 would reignite bullish momentum, ideal for a breakout trade targeting 3,400. But beware, a sustained breach below 3,300 exposes gold to a deeper correction towards 3,245. Finally, stocks continue to climb. The S&P 500 and Nasdaq are flirting with new all-time highs, buoyed by strong tech earnings and hopes of Federal Reserve rate cuts. Futures remain firm even after recent geopolitical waning from the Israel-Iran truce. Yet investors are wise, keeping an eye on upcoming PCE inflation data. Remember, this is the Federal Reserve's preferred inflation gauge, and the looming trade deadline chatter. So what's the risk here? The next headline could trigger volatility, but that also means opportunities for disciplined entries. Checking the S&P 500 chart, despite fresh highs, there are signs of consolidation between roughly 6,160 and 6,140. That range could offer low-risk entry points. Buying the dip if futures pull back slightly ahead of PCE. But remember, if inflation surprises to the upside or Trump's tariff deadline hits without resolution, this area could crack, triggering a sell-off towards the 50 Fibonacci retracement level at 6,050. Looking ahead, the big mover may be today's PCE inflation print, since it's the Fed's go-to indicator. A surprise here could tip the scales. Gold could explore higher or tumble. USDCHF could chop around and equities could pivot sharply. Plus, whispers of a potential Fed restructuring later this year could shift everything. And that wraps up our daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to ATFX Africa and experience the difference for yourself. Until next time, stay sharp, stay focused, and trade smart.